Imagine opening your trading app. Overnight, the price of gold has jumped $50. Some traders just made thousands. Others lost weeks of hard-earned money. So, what made the difference? It wasn't luck. It was knowledge. Most beginners think gold trading is simply guessing whether the price will go up or down. But professional traders don't guess. They understand why gold moves before they place a trade. And that's exactly what you'll learn in this video. Whether you're completely new to gold trading or you've been hearing the term XAUUSD everywhere, this beginner's guide will explain everything in simple language. By the end of this video, you'll know what XAUUSD means, what moves gold prices, the biggest mistakes beginners make, and how to start learning the right way. So, let's get started. Let's start with the most important question. What exactly is gold trading? When most people hear the word gold, they imagine jewelry, gold coins, or shiny gold bars locked away inside a bank vault. And while that's true, the gold traded in financial markets is very different. Gold trading doesn't mean you're buying a physical gold bar and storing it in your home. Instead, you're trading the price of gold. Think of it like this. Imagine you believe the price of gold is going to rise tomorrow. If you're right, you could potentially profit from that price movement. If you're wrong, you could lose money. That's the basic idea behind gold trading. Every single day, millions of traders, investors, banks, hedge funds, and even central banks are watching the gold market. Some trade for a few minutes, some invest for years. But they all have one thing in common. They're trying to understand where the price of gold might go next. And that's what makes gold one of the most exciting, and sometimes one of the most volatile, markets in the world. Let's answer the question every beginner asks first. What exactly is XAUUSD, and why does everyone keep talking about it? So let's talk about a word you've probably seen everywhere if you've searched anything related to gold trading. XAUUSD. At first glance, it looks complicated. But once you understand it, you'll realize it's actually very simple. Let's break it down. XAU is the international symbol for 1 ounce of gold, and USD stands for the United States dollar. So when you put them together, XAUUSD simply means the price of 1 ounce of gold measured in US dollars. For example, if XAUUSD is trading at $3,350, it means 1 ounce of gold is worth $3,350 US dollars. Now imagine the price moves from $3,350 to $3,370. That doesn't mean someone found more gold overnight. It simply means the market now values 1 ounce of gold $20 higher than before. And that constant change in price is what traders try to take advantage of. Some traders believe the price will rise. Others believe it will fall. Their buying and selling activity is what keeps the market moving every second. How gold trading works. Here's something that surprises most beginners. You don't need to own a gold bar to trade gold. You're simply trading whether the price of gold will go up or down. If you think the price will rise, you place a buy trade. If you're right, you profit. If you think the price will fall, you place a sell trade. If the market drops, you can still profit. Simple, right? But here's the important part. Every opportunity comes with risk. That's why successful traders don't chase luck. They trade with a plan, manage their risk, and stay disciplined. Now that you know how gold trading works, let's look at the biggest question of all. What actually moves the price of gold? Gold doesn't move randomly. Behind every major price movement, there's usually a reason. Once you understand these reasons, you'll stop guessing and start understanding the market. Here are the 5 biggest factors that influence gold prices. 1. Inflation. When the cost of everyday goods rises, the value of money decreases. During these times, many investors turn to gold to help protect their purchasing power. That's why gold is often called a hedge against inflation. 2. Interest rates. Interest rates also play a big role. Since gold doesn't pay interest, higher interest rates can make other investments more attractive. But when rates fall, gold often becomes more appealing to investors. 3. The US dollar. Gold is priced in US dollars, so the two often move in opposite directions. A stronger dollar can put pressure on gold prices, while a weaker dollar can make gold more attractive to buyers worldwide. 4. Global uncertainty. During events like economic crises, wars, or geopolitical tensions, investors often seek safer assets. Gold has historically been one of those choices, which is why its price often rises during uncertain times. 5. Central banks. Finally, central banks are some of the world's largest gold buyers. When they increase their gold reserves, it can strengthen confidence in the gold market and influence long-term price trends. The important thing to remember is this: gold doesn't move without a reason. It responds to what's happening in the global economy. The more you understand these factors, the easier it becomes to understand why the market moves. When is the best time to trade gold? Now that you know what moves gold, let's answer another important question. When is the best time to trade it? Gold is traded almost 24 hours a day during the weekdays, but not every hour is equally active. The busiest time is when the London and New York trading sessions overlap. This is when major banks, institutions, and professional traders are all active, creating higher trading volume and bigger price movements. For beginners, this means more opportunities, but also more risk. Higher volatility can move the market quickly, so patience and proper risk management are essential. Remember, successful traders don't trade all day. They wait for the right opportunity. Common mistakes beginners make. Before you place your first trade, there's something important you should know. Most beginners don't fail because gold is difficult to trade. They fail because they make the same avoidable mistakes. Let's look at the 3 biggest ones. Mistake number 1: trading without learning. Many beginners watch one strategy online and jump straight into the market. But trading isn't gambling, it's a skill. The more you understand the market, the better your decisions become. Mistake number 2: risking too much. Many traders believe risking more money means making more profit. But bigger positions also mean bigger losses. Successful traders focus on protecting their capital first, because staying in the market is more important than chasing quick profits. Mistake number 3: trading with emotions. The market doesn't care whether you're excited, frustrated, or trying to recover a loss. Emotional decisions often lead to costly mistakes. That's why professional traders follow a trading plan, stick to their rules, and know when not to trade. Sometimes, the best trade is no trade at all. A simple approach for beginners. So, if you're completely new to gold trading, where should you actually begin? Start with understanding the trend. Ask yourself, is the market generally moving higher, lower, or simply moving sideways? Next, identify important support and resistance levels. These are areas where price has historically reacted. They're not magic lines, but they can help you understand where buyers and sellers have previously stepped into the market. Then comes the most important habit of all. Always manage your risk. Never risk money you can't afford to lose. Use stop-loss orders when appropriate. And don't judge yourself based on one trade. Professional traders think in probabilities. They know that even great trading strategies can have losing trades. What matters isn't winning every trade. What matters is staying consistent over time. If this video helped you understand gold trading a little better, then you're already ahead of many beginners. Because knowledge is your biggest advantage in the financial markets. Here on this channel, we break down gold trading, XAUUSD, market psychology, economic news, and trading concepts into simple, practical lessons that anyone can understand. So if you want to become a smarter trader, not just a faster one, make sure to subscribe and turn on notifications so you don't miss our weekly videos. And before you go, I'd love to hear from you. What's the biggest challenge you're facing with gold trading right now? Leave your answer in the comments below. I read every comment, and your question might even inspire a future video. Thank you so much for watching. Stay curious, keep learning, protect your capital, and I'll see you in the next video.